My name is Akil Stokes. I am a professional trader and a real estate investor, and I want to give you guys a quick periscope on this Friday afternoon, just giving you a little bit of an update on the real estate side of things. Most of you guys know that the bulk of my content deals with trading and the Forex market in specific, but many of you have also requested that I keep you guys updated on the real estate business as well, just because you have some interest in that. Now, if you've been paying attention to the videos that I've put out, I put out a video on Monday called 3 Things That You Need to Know Before Getting Into Business. And this topic, I guess, kind of piggybacks off that idea. As you know, I took off yesterday. We had the Bank of England rate statement. I took off yesterday, took my kid to the zoo with the wife, and my sister met me down there as well. And I also broke my phone, so I've been kind of away from technology for about a day or so, which is it's a relief. It's a relief. No emails, no text messages, none of that stuff. It was cool to just get away, spend the day outside with some animals, with family, and enjoy yourself. Well, came back into the office this morning, and it was funny. The first thing I saw was an email from one of my business partners that said, "Try not to cry. Try not to cry when you read this." And that's never that's never a good sign when you see an email that says "try not to cry when you read this." And it goes back to our recent investment property. For you guys that have been following, the last investment property that we bought, we purchased it, or we closed on it at the end of May, the very end of May. And we've been we've been doing sort of a renovation project on it. And it was an interesting property. We had a big debate on it. It was a cash buy. We put in a very aggressive bid for it, a really cheap bid for it. But one of the stipulations from the owner was a very motivated seller, which was good. You know, it's always a good thing. Motivated sellers are good. It was a stipulation by the seller that they did not want an inspection done on the property. And that is a big red flag. I was highly against it. When we met about it, I was like, no, scratch the deal. I don't want to do it. If we can't inspect it, if we can't figure out exactly what we're getting into, I don't want to do the deal. We actually did that with the first property that we bought. We did that. We purchased it without an inspection, and it's been a barn fire ever since. It's been thing after thing after thing that's wrong. And it's like, we told ourselves, we were young, we were dumb, we're never doing that again. So when the saying, fool me once, shame on me, or shame on you, fool me twice, I'm not going to fall for the same thing again. However, we ended up talking about it, lengthy discussion, and we ended up going with the property just because, again, the bid we put in for it was so cheap that even worst case scenario with what we thought needed to be fixed, based off of us going there and looking at it, we thought it was still a profitable deal. It met our requirements. So we purchased the property. Again, cash buy, really quick closing. Got inside of it, started, had a team to clean it out or whatever, and we had our contractor come in there. Now, originally, we made a specific, certain estimation for what we need to do. Some of the stuff the contractor was going to do, some of the stuff we were going to do by ourselves. And the contractor was mainly in communication with my business partner. One of the main reasons I decided to turn what was a real estate hobby of mine into a business is because I don't really like dealing with people, right? I don't like dealing with people. I like work being done without me actually needing to do it. So I surrounded myself with people that can answer for me. Again, I hear the problems, I help create the solutions, but I don't want to be the one bothered on the phone every single second. I don't want to be the one dealing with tenants and going over and fixing light bulbs and all of that stuff where I can be, spending my time on charts or working with traders that I teach. So that's why we started the business for it. So usually my partner was the point man for the communication with the contractor. However, he was on a vacation out in the Czech Republic, which means I had to deal with all of the communication. And it seems like the contractor couldn't wait until my business partner left. And the whole week was call after call after call. Hey, guess what? We were looking for this and we found this. We had to tear this out. This was missing. This was damaged. And I'm like, oh man. And it's killing me. And I'm like, all right, just, get it done. The goal was to have it rented by July. Right? Cheap property. So we're going to rent it out. We can get a lot more off rent than flipping it. So we're like, all right, just do it, get it done. Come on, so we can get my guy in there. We can do the floors. So we finally got, I guess the final bill came in yesterday, and again, this is where the email comes in store. Where it's like, hey, try not to cry when you read this, and I open it up, and essentially we had to spend about 25% more on the property than what we originally planned, and it's not devastating. Again, it was a very, very, very cheap property, so it's still going to be a profitable deal in the long run. Trust me, especially again, we're not, it was a cash buy, so there's no other monthly bills we have to pay other than the normal stuff. But it just shows you need to be prepared. And what we talked about in Monday's video was just, when you're going into business, you need to prepare for your cost of startup. You need to prepare for your monthly expenses. You need to put a time limit on your goals as well. But one thing I left out is you need that emergency fund. You need enough money. You don't want to go broke each month trying to maintain your business. You want to have, especially if you're in real estate, you want to have that emergency fund because stuff will happen. The unexpected. Expect the unexpected. And that way it turns into, when something like this happens, when you spend 25% over budget, it turns into an unfortunate situation versus a situation where maybe you're going broke, or maybe you have to take out another loan just to cover some repair costs, and you put yourself in a hole because now you've got interest, and interest each month is sucking into your bottom line, and it's just, always prepare for that. And if you guys haven't seen that video, just head over to my YouTube channel. Just YouTube search my name, Akil Stokes. It's going to be under a playlist called Most Recent Updates. I've been doing kind of 2 separate YouTube channels now. Most of the trading stuff is going to be originally posted on our Trade Empowered YouTube page. I'm still putting it under a playlist under Most Recent Uploads on my YouTube page as well. So if you guys subscribe to both, you're going to kind of get the best of both worlds. So that is the update on the real estate situation. I thought that was a fun story. Try not to cry when you read this. That's an awesome way to start the day. But again, it's not the end of the world because you plan for stuff like this. It's just like trading. For those of you that are traders, right? You don't trade such a big position size that, if you're in a trade and say we gap over the weekend, it's a perfect example. I've got a few trades going over the weekend where you're not in a position where if it gaps over the weekend, you've hit margin call. If it gaps over the weekend and stops you out, and for you guys that don't know, if the market gaps, you don't get filled at your initial stop loss. You get filled below it, wherever the market opens at, and your orders get triggered. But you prepare for it. You plan smart enough so that, hey, it's unfortunate you took a bigger loss than you were supposed to, but you still have a chip in the chair. And as long as you have a chip in a chair, you can take a seat at the table, right? And that's all that matters. If you sit at the table and if you're consistently profitable, you can find your way back. So unfortunate, but it happens. It's still going to be a profitable situation. Knock on wood. Little wooden watch here. Knock on wood. I didn't jinx it and nothing else bad happens, but always prepare for that type of stuff and game plan for the worst. And another smart thing is we've been very aggressive this year. We want to get at least one more property before the year ends, and we have a checklist, a waiting list of properties that we want to buy, and we put them in order of rental, flip, and kind of order of what we think are the best situation. And there's one that has been on our list for probably about 5 or 6 months now. It's a great property. It's a good property. It's a profitable one. It just hasn't made the cut, and we were really thinking about jumping on that right away. Good deals don't last. We were thinking about jumping on it right away, and it's a good thing we waited. We decided, hey, let's wait until we get everything handled with this one property before we jump on that property, because you never know. What if we would have jumped on that property? What if we would have had a massive unexpected bill on the other property, and now money is going into here, maybe you can't afford to close on that, and now you're in a world of trouble. So be smart, plan, execute discipline and patience, and you'll be on the right track. So wanted to keep you guys updated. Thank you for the share. I should have muted my phone because you guys are hearing this, but you guys have a great weekend, traders. We had a great week of trading. Looking to get back at it next week, and take care. Enjoy yourself.